Hey everyone, welcome back to the MHP Show podcast. I'm your host, Derek Vickers, and on the MHP Show, we're talking about mobile home parks. We're talking about the operations. We're talking about raising capital. We're talking about, managing deals, getting deals done in every aspect of the business. And today, I have a guest with us that I will introduce you here shortly, or I'll have him introduce himself. But before we do that, look, if you got some cash sitting on the sidelines before the end of 2025 and you're looking for bonus depreciation, or you're looking to deploy your capital into recession resistant assets and you love mobile home parks and you don't want to do the work, look, go to victorycapital.com and check out Fund 1. We already have 4 deals closed in Fund 1 and 4 more deals under contract closing in Fund 1. So we're moving. And if you want to learn more about that, you can reach out to me and our team at invest@victorycapital.com, or you can go to the website and check it out. It's victorycapital.com, VICKTORY.com, and you can go to offerings. So now I'm going to introduce our guest. I got Mr. Jeff Flynn with me here today at Aspen Ridge Capital. What's up, dude?
Not much, man. Thanks for having me on. I appreciate it. We finally got it done.
I know we finally did, and it was my fault. It was totally my fault the other week, but I'm glad we got it back going. And you and I first met at the beginning of this year at an event out in Phoenix, and we were, obviously, you're both in mobile home parks. You inevitably start talking about the business. So how did you, I know you told me a little bit about how you got into this, and I know this is like, people always ask this question, but I'm always curious because it's just not, most people want to get into big, sexy apartments. Like, why mobile home parks? Why did you get into them and how'd you do it?
Well, I mean, to go back a step before that, it would make more sense. I was in the Navy, and I was about halfway through my career, and I realized I thought I was going to do 20 years. I was at 2 years, and I was like, yeah, that was a wrong decision. I'm not doing that. I liked it, but I knew I was getting out. And I was trying to think of what I was going to do after that. And there was a brief period of time where I switched commands. I went from Pensacola, Florida to Denver, Colorado, where I live today. And that was right as COVID hit the country. And it was this whole process. I had to get my clearance approved and all this stuff. And I was an essential worker, but the people who signed off on my paperwork for my clearance were non-essential workers. So again, the government in its brilliance couldn't even let me into the building where they just sent me. So it turned into this 3-month process where all I did was text them in the morning saying I'm alive. And they're like, okay, thank you. And that was it.
Wow.
So it was a financial freedom test run is what I always call it. Cause for 3 months, I didn't make a lot of money. I was an E4 at the time. Like, you can Google what they make. It's nothing.
What's E4 mean?
It's your rank. So I was a petty officer, 3rd class. So they don't even hide about you're petty and you're the 3rd class citizen.
Yeah.
There's no hiding it. But I was basically, it was the coolest experience ever because my roommate and I, we climbed all sorts of mountains. We went skiing, we went hiking, we went whitewater rafting. And I was just like, man, I really was going about this all wrong. Like, I'm not going to need a ton of money to be happy. I just need to get my things in order so I have the time to go do what I want to do. So I started learning about real estate then. I had a brief stint where I was trying to trade options and I lost way more money than I had at the time to lose. So then I was like, that's when I kind of learned more and more about real estate. I bought a house with the VA loan, rented it out. And then my brother-in-law, actually, of all things, was working. He had left his job as a construction company to go work at a firm that only sold mobile home parks. And at the time, that's insane. What are you doing? How can anybody make a living selling, trailer parks for a living?
And when was this?
2020 or no?
Okay.
Sorry, yeah, early 2020. And I shadowed him and I was like, wow, this is way simpler than what I thought. It was just a spreadsheet with park owners and a spreadsheet with buyers. And he was just going back and forth calling them. So I shadowed. I had a night shift in the Navy. So during the day I would go work as a broker, which was another cool experience to teach me kind of the mindset between an investor and like people who are trying to do a career in something. I would say without a doubt, the people in the military intelligence are smarter. But they don't think about money the same way as investors did. So long story short, I did that. Once I got out, I actually closed on my first mobile home park. Yeah, I got out on a Friday. I closed on my first one on a Monday. So it was one thing right into the next.
Oh, wow.
Brokering, I didn't like. I knew I liked real estate. I did not like brokering. I did not like having to represent people. I always found that was irritating. So I learned a lot about it, then started buying them.
Yeah. So you bought like you got out of the Navy, and then literally that coming Monday, you had your first deal.
Yeah, it was nuts. I left the command in my uniform. My wife had the U-Haul packed. We started the drive from Denver to Alabama, and then like that Monday we're closing. It was cool. It was one thing right into the it kind of just worked out that way because like the closing it got extended. I was actually supposed to be closing out while I was still in, but I'm kind of glad that didn't happen because I learned immediately it's not passive.
Yeah, yeah. You learn that pretty quick in this business.
Yeah.
Because you're not going to buy. I mean, maybe you can if your first park, you can buy a 5-star community that needs no work. I mean, we bought a deal last year that is definitely the most hands-off deal I've ever purchased. We wouldn't typically buy a deal like this, but it's a deal full of snowbirds. So like right now, like the park's kind of empty, right? Like no one's there. But that's rare. That's rare, and you know that. So how'd you find that deal? You found that deal when you were when you were doing brokering, or?
Yeah, I mean, when the way I found it was just going on Google Maps, and I saw it there. And like none of the parks I've ever bought are even like on Google Maps. I've still never bought an on-market deal to this day. It's all just getting a hold of the owners directly. But that was it. I was a small town in Alabama. I went to Auburn, so I was very familiar with that area. It's a smaller. It's called Tallahassee, Alabama, but I had a friend there, so I wasn't there all the time. And when you have in-depth experience in a small town, you can look past some of what other people would tell you about, oh, it's too small or this or that, or I knew it was a great place. But I saw this in another park there. I called both of the owners. It was just Google Maps. I saw their sign, and sure enough, that's the owner. And just started talking to them. And, a lot of these owners, they just don't know how to go about selling it. They're not really real estate people. They just kind of owned land and stumbled into it being a park over time. And we struck up a deal after a couple of months of back and forth, and we went from there.
Nice. How'd you get the money for the first deal?
Well, it was way more of my own money than I should have put into it. So it was me and two partners. So my brother-in-law was brokering, and then we had a third partner who had actually operated parks before. But we all put in our own money, and for me, it was nerve-wracking. It was more money than I made in a year in the Navy, and I had saved up door dashing and charging Lime scooters, and I had closed a few deals as a broker, so I had that. And I'm a big fan of Grant Cardone. He always talks about going broke buying real estate. And at the time I went under contract, I had a salary, so I didn't really think too much of it. And then I closed, and I'm like, I don't have a steady job. That was probably too much to put in.
Yeah.
But it made me work really, really hard as a broker for a while to kind of keep getting some deals going, so I could keep it going.
Yeah, and it's interesting you say that because I'm a big fan of Grant Cardone too, and I like that's one of his maxims that I like. Kind of, it's like because I did this back in 2022. Like I just put everything in on the last few deals we bought before rates started going up, and I was glad that I did. And now that I'm glad I did, although it was a little hard then, but I'm still glad that I did that. And in the beginning, like every acquisition fee that I got, it was all rolled back into the deals. And I'm damn glad I did that now. But, it was kind of, I still had the insurance business in the beginning, so I was making some income there. But I think when you do that, just like you said, it kind of forces you to hustle. And it's really a delayed gratification thing more than anything. I mean, real estate generally is a delayed gratification, like the whole deal. Like if you're not a delayed gratification kind of person, then don't get in the real estate business, especially what Jeff and I do, because it's really, you can make some money up front, but it's really, you're going for the hit on the back end.
Right.
But I wanted to ask you, like you were in the Navy. I wanted to back up to that. Like what did you learn in the Navy that's helped you become a successful real estate investor?
That's a good question. I would say some of it is just the fact that you're not that important. I think too much of our society today is making everybody feel special. I'm a huge proponent. I think everybody should do 2 years at least in the military, even if we're not at war. Just because that first day where they shave your head and you realize how ugly you are, and they're just talking crap about you for 2 months. Like people need that. I think people really need that. But there's a lot of stuff about being punctual, attention to detail. That's huge. And a lot of it is just redundancies. Like now in our business, for finding deals, it doesn't apply that much. But on the backside of operating them, there's two people responsible for every important task. Like if you leave it to one person, there's a really high likelihood that they're somehow going to make a mistake or forget. When you put two people on an important task, that goes very, very low. And so that's something I've done a lot of, is basically two-person integrity. Make sure you have enough brain power on important tasks. So that's one of them. But again, just kind of the attention to detail. I mean, in the first 2 months in the military, you think you're shooting guns and all this stuff. All you're doing is folding your laundry. And it's insane, but it does teach you to get really, really particular and pay really close attention to how you do things.
Yeah. It's funny. I was like, and I agree with you that people should, like, I never served, and I agree with you that people should have to serve 2 years, because just I've talked to people that have, and they say that, like, they kind of have the same viewpoint that you do because of those certain things, because attention to detail is very important. And I feel like I've gotten even more and more and more like detailed oriented. And I never noticed this during the day, because sometimes I feel like I'm like, whatever, but I usually have someone come and detail my truck at the house. But the other day I ran it through the car wash, and I'm like, okay, I'm going to just vacuum the inside at the car wash myself and clean it out. And I'm like super, like, I'm getting particular with it. And I'm like, oh, I got to get this little thing and this little thing, like really, really like attentive to it. And, I just think that that's so important to have that in this business, especially on the back end with operations. You're dealing with investors, you're dealing with the SEC, you're dealing with funds, you're dealing with all that. Like, the attention to detail is very important, because you have a lot on the line when you're doing that. It is extremely important to have that attention to detail. So what are you guys up to now, Jeff? Like, are you currently doing syndications? Are you doing funds? Like, where are you at now?
Well, I started about a year ago doing one-off syndications. So that has been good. And then I've done enough of them now. I'm starting to look at the fund model. Just I know there's more complexities to it. I think there's, at the same time, every deal we do is kind of the exact same thing. We're going to buy it, we're going to approve it, we're going to refinance it, we're going to hold it. And so I am looking into the fund model. I don't have anything officially started on that yet, but I think it's one of those things, like, to start a fund, you really need to have velocity, and you have to have all your systems in check, because it just gets worse and worse if you're not doing the simple things right. But that's pretty much what I'm working on. I'm always looking at deals, always trying to find something creative to get done. But yeah, probably sometime in 2026, going to have a fund that officially launches.
Yeah, that's great, man. And I mean, this is, I'm just getting into that now. And I mean, I like it better because investors, they write bigger checks into a fund. It sounds better. And I think the bigger the fund, the bigger investor you will attract. It's like, I was talking to somebody the other day, and if you're doing $1 million deal and you're raising $400,000 for it, you have to think of the person that you're going to attract to do that. So if you go to someone that's worth 50 million, they're going to do, why am I going to invest in that? What am I going to do? Invest 100 grand? Like, doesn't move the needle for me.
Yeah.
But if you're like, hey, I'm doing a $50 million fund. Okay, I'll write you a check for 4, right? And even bigger than that, I think, if my theory holds true, if you do a $250 million fund, because we've talked to some family offices and things, and some kind of like mid-tier family offices, and they're like, yeah, you guys are too small for us. $20 million fund is too small for us. I'm like, okay, if I was doing a $250 million fund, would they have written me a $15 million check?
Yeah. It's counterintuitive. It's very true. And there's logistics that make it difficult when you have, because I've done a lot of what you're talking about, those smaller deals. Mm-hmm. And I know for a fact there are investors who are like, hey, I love this. There's a certain threshold that we can't let them invest more of. Otherwise, they own a large enough percentage. We have to underwrite them into loan and all this. And it's like, it's too small for them, and it's a crazy problem to have. I'm not really from that world of really wealthy people. So I'm starting to learn that slowly. And it's like, I guess so. It does make sense. Like, they probably have 20 K1s they have to file at the end of the year. Even if it's a great deal. That's just not worth their time. It's a crazy problem, but it is absolutely true.
Yeah, and I think it's more like 100 K1s.
Yeah,
right? Because I got a lot of damn K1s, but it's like, it's very counterintuitive, and it's almost the other thing is like, I talked about real estate. Like, you gotta have the balls to do it. Like, I've struggled worse on trying to raise, $1.5 million for a deal than I've struggled raising for the fund, just because it's the public that you are attracting is in a different bucket. Right. And but if you're raising a $250 million fund and you're going to do a $90 million deal, you got to have $1 million for earnest money. You got to have so you got to have some balls there to be able to do that. Because if you don't lose the deal, if you don't close the deal, you're going to lose $1 million. So it's like, I think going bigger is better in the end. I just think it is. And I'll tell you when we do our next fund, it'll be a lot bigger than this one if this theory holds true, but we will see. Right. What do you think? What was the first? I know you talked about your first deal, but what was the first deal that you actually syndicated and you actually went out and tried to raise capital for people? How difficult and a pain in the ass was it?
It was only difficult because I made it difficult. In my head, I just thought, who's going to trust me? And it was my 7th park at that point. And to me, I had a family member at one point raise a lot of money from people and lose it all into business. And I raising money to me is terrifying. I still hate it. Every time someone wires this money, I'm like, okay, this, let's double check I did everything right. It's a stressful thing for me. And I didn't want to ask people for money. I didn't realize till at the time that everybody was so excited that they finally had an opportunity like this, because what we do is pretty crazy, right? We find a deal that actually makes sense, right? I live in Denver, Colorado. People here buy duplexes for $1 million where they lose money, but it's probably going to go up in value. So they still buy it. I mean, it's insane to me. But that's what people do. And then you can bring somebody an opportunity where you don't have to do any work. You're going to get in the upside. You're going to get a lot of depreciation. And we're probably going to refinance it in a certain period. You get your money back and we're still going to cash flow. And I didn't realize how unique that was because everybody I knew was in the mobile home park space. I had just basically spent 2 years with my head down with my partner, just he and I working together on everything. I forgot that what other people in real estate are struggling with. And once I started realizing that people were excited about it, it was easier. It wasn't a huge raise. I ended up raising $385,000 and I did it kind of by the skin of my teeth, but it's the best deal I've done so far to date, I think. And it was the nicest park I've bought by far, which is another thing I've learned that when you start off, you kind of want to do these smaller ones that are rougher, but you don't have experience yet to do the rougher ones. You need to do, I think, the better quality ones sooner. So you learn the basics and then you can kind of go into the more aggressive ones, which is hard to pull off in practice, but it was tough. It was basically my friends and family and people I hadn't talked to in a very long time. Some Navy buddies actually, which was interesting. That surprised me a lot. I didn't think I would be able to get them to scrape enough money together to buy dinner together, let alone put it into this deal. And some of them were like, yeah, it's just sitting in my TSB doing nothing. And this sounds awesome. So it was
TSB. What's a TSB?
A TSP is a thrift savings. I forget what else it stands for. It's basically your Navy retirement. They put it in really, really stable stuff. It doesn't really do all that much.
Yeah. Yeah. So it sounds like it was kind of a pain, but not too terrible on the first rate.
It wasn't too terrible. It was it was a small raise. I was in the other part that made it tough at the time. My wife was 8.5 months pregnant. So we were moving too. So it just made it a lot going on. But in the grand scheme of things, it was actually really, looking back, it was very simple. But to your point, you don't realize how many people need opportunities like this to invest. And I just never thought of it that way. I always felt like I was going to be asking people for money. And it's just a mindset you have to get over, that people want these kind of opportunities. They can't find them easily.
Yeah. Yeah. That's very true. And especially in our business, there's just not a lot of them. In comparison to multifamily and things like that. But that's interesting, dude, because I remember my first one, I think I forget how much we were raising, 1.5. And it was a pain, dude. I mean, it was just it was just, grindy and whatever. And I never so for me, I don't have net worth in anything else with mobile home parks. I'm all in on it. I don't have an IRA or 401k or any of that. And so I never feel like I'm selling this. I'm like, dude, this is a great deal. Whatever, you can do it or not do it. But like that first deal, I don't know if it's like a rite of passage or something that like Derek had to grind his way through that, but it was just tough, man. I reached out to people and like, hey, I got this, and I'm probably overcomplicating it to people that don't understand real estate. Here's a tip for you when you're reaching out for people raising capital. Like, you need to kind of understand how much they understand real estate, because if they don't know anything and you're like, hey, we're going to get this IRR and this, multiple on capital, and the cap rate going in cap rates this, they're going to freaking their eyes are going to roll in the back of their head and they're not going to know. So you need to simplify that, which I have learned. Right? Like, people that I know in the insurance business, I'm like, hey guys, you want to make, 8% on your money while we wait for the value to go up and you don't have to do shit. Yes, that sounds good, Derek. That sounds good, Derek. Okay.
Yeah. To that same note, my waterfall on the first one was insanely complex, where at a certain IRR, it went to this, and then it was 70-30 until it went to this, and it was 50-50. And people, it was better for the investors than what I do now, which is just a pref and then a split marginally. Really, it's like barely noticeable, but it was just hard to explain. Where now it's just, oh, you get the first 8%, then we split everything else.
Yeah.
It's easy, right? And I'm the same way, because people will send me deals sometimes, but I never have money to invest. I'm always, if I do have it, I'm going to put it in my own deal. But
right.
And it's just too confusing. They try to make it, the finance industry as a whole, I think, tends to overcomplicate things to make themselves sound smarter.
Right.
Like, you ask, a plumber if they have money, they're going to say, no, I'm broke. Yes, the finance, guy in a Patagonia in New York, he's going to say, no, I'm a liquid right now. Like, okay, you're broke. It's the same thing.
Yeah.
Making it sound confusing. It's the same thing, right? And what's your return? What are you getting? And I've definitely found that's another thing I think that made the first one tough. I thought I had to sound a lot smarter than I was. People just want to know the basics. Like, because they don't understand why you even buy a mobile home park at all. It's like, well, I'm buying this community. The homes are already there. We're buying the land underneath the houses. The market is way higher than what this guy's charging. He's not fixing anything. We're just going to fix things and we're going to charge more. That's it. That's all we're doing. And it really is that simple. You really don't, I every time I have to put a pitch deck together, it's tough for me, because it's like the underwriting, when I really got the deal, was on my cell phone. It was not a spreadsheet. Spreadsheets after the fact, like, make sure I'm not missing anything. But to
correct,
me, I can figure out if a deal's good in 30 seconds and know if I'm going to move forward with it.
Right. Yeah. And I'm the same way. It's like, okay, good. Yeah, let's roll. And I think you gain that, over time, that ability. I mean, in some deals, like the deal where we're literally closing on like any second today, I literally drove through the deal. I got the purchase price and drove through. I didn't even calculate the numbers on my phone. I said, yeah, I want this deal. At that price. It was just immediate. Like, it was just, because when you know the market and you know what the hell like you're doing, and you know what you're looking for, it's much easier to find deals. And it sounds like that you've gotten to that same spot where you know exactly what you're looking for. Like, what is your bread and butter right down the fairway for Aspen Ridge Capital type of deal?
I start with, what's it going to be worth when it's stabilized? I think I really don't care too much about what it's worth. I'm not underwriting it to get an appraisal. I'm just trying to figure out what I can pay for it. So I take the finished value. 60% of that is probably where I want to land. So I can get the value up 50% and refinance it. And that's why a lot of times people ask me, what's your going in cap rate? It's like, I mean, I can sit down and calculate it, but it's the mom and pop.
It doesn't matter.
Yeah. Their financials are all literally on a napkin. Like, people in the industry use that as a joke. Like, it is a real thing. Like, they just write it on paper.
That's right.
And to me, it's just where, I've accepted the fact that most deals don't perform well in the first year, but it's a value add. If you flip a house, you don't get a monthly check until it's done. It's kind of the same thing. So that's what I look for. And, as a former broker, I realize how important that is, because if a deal is good and I'm a broker, am I going to send it to Derek, who I can just send him a text with the 5 bullet points and he's going to send it an offer? Or am I going to send it to this guy who just went to a boot camp and needs 10 pages of due diligence just to get an offer? Like, that's not going to happen. Like, it's just not going to happen. Maybe I think in other assets it does more, because there's more moving parts, but mobile home parks are so simple. If I'm brokering and I get somebody on the phone today and they're willing to sell, here's the basics. You go figure out the whatever else you need to know as a buyer, but it shouldn't be much more than that. And really that's how I think a lot of off market deals transact. And that's why so many in the mobile home park space happen off market.
Yeah, I agree with you, because you don't need that much, right? And, I think people that, going to boot camps and stuff is good, but you don't need, like, when I first kind of got data about how to calculate the value of the park, I mean, I was doing that and getting told to F off on the phone.
Yeah.
Every time, because I'm asking for like a 15 cap in Florida.
Yeah.
And, which isn't real. So I got, blasted and hung up on, and you have to start learning somewhere, right? And you just got to kind of figure out what works for you, get your basis of knowledge, right? It's a data point. Like, it's not absolute. Like, it can differ if for different areas or different markets or things. But, I forget who I was talking to the other day, but they're like, yeah, we got an offer, but this guy needed this whole list of stuff to kind of finalize. I'm like, dude, for what? I'll offer this, send him or actually, don't even send him an LOI. Here's a contract.
Yeah.
Right.
Yeah.
You just got to develop that certainty in what you're doing.
And you have good due diligence on the back end. So it's not like you do this and you just don't ask any questions. But what's interesting about a park is, for the most part, you can see everything. If there's issues with the roads, you can see it. Whereas if you have stuff like septic tanks or water lines, you got to scope afterwards. But for the most part, you can drive through and know all you need to know. So that, and I dealt with it all the time with a broker, where somebody would be buying a home or they're looking at a park, and there's a lot of park-owned homes, and they're asking me for the NADA values and the appraisals on the homes. I'm like, that shouldn't matter at all, right? Like, okay, maybe if this is a brand new home and there's 50 of them and there's still loans on them, but these are 90s models homes. Like, you want me to get the actual appraisal on the homes themselves for all 50 of them? Like, it's crazy. There's stuff like that it's definitely being a broker taught me a lot about what you have to do to be a good client for brokers. The less work you do, the better. And sometimes brokers will send me information. They're like, well, I'm still going to put together an OM. I'm like, no, don't say, don't worry about it. Like, you're just going to have ChatGPT write it anyway. Just send me the details. Yeah. I'll come up with an offer. That should be good enough. So,
yeah. What are deal killers for you?
I think lagoons. I think that's one of the ones. And I know people differ on that. I don't know. Just from my perspective as a broker, I don't even really understand a ton of why there's such a big issue, other than obviously it's just a big pond with sewage and it could be an environmental risk. But I just saw so many buyers just say no right away that I realized, your buyer pool just shrinks. So it kind of reduces your options a bit. So that's one of them. Outside of that, it's mostly going to come down to the price, and which on the front end, but a lot of times you get into it and you realize a lot of what they told you is not right. Like, hey, they said there was 15 park-owned homes. They're all empty. Half of them or they're all full and half of them are empty. That's a big issue. And outside of that, I mean, it's really comes down to if there's a city. I bought a park recently where the city was issuing violations, and so I had to go talk to the city and make sure it was just the owner just not picking up trash, right? And they just it went on for a decade, to the point where the city had to get involved. And so that, and then just if there's clay pipes or issues with the sewer lines that are going to be a massive replacement cost. I looked at a park where we were under contract for $700,000, and the sewer line repair was $600,000. And it's just like, okay, obviously I'm not renegotiating that. I'm just dropping that.
Yeah.
Stuff like that. But it's really on the front end. I can drive through a park and spot the immediate ones. It really just comes down, I think, like the utilities that would make a deal, kill a deal for me.
Yeah. And I think I've never looked at a lagoon, so I can't say I wouldn't buy one. I just don't think there's any in Florida. I mean, most of the consensus is like people don't want to buy wastewater treatment plants. But I mean, I have 5 of them now, and once you learn what you're doing, it's just like, okay, you can kind of mitigate the risk, and there's things you can deal with. Now, if you have a problem with them, it can be a pain in the ass. But I think if you just get smarter on these private utilities and things, like you can buy them. I mean, look, like city water and city sewer is obviously preferred, but even then, like, we had to replace the sewer lines at the park, and it was like $85,000 at a 35 lot park. So, like, you still have shit, with it.
Yeah.
Like,
Yeah. I noticed that a lot. I'm one of the fans. Like I prefer the operational simplicity of city sewer, but it always comes with a city, which every city is different, which I hate. Like my favorite park is in the county. It's all on septic. They all have a quarter acre. I don't have anybody to talk to about it. Basically, just the health department if I ever installed new septic, which they would allow me to do if I wanted to. If I wanted to add a lot, I just get a permit. I mean, it would be a 2-day process. So on the back end, again, like a park is going to sell for a lot more if it's on city water and city sewer. I don't really have many. I don't have any wells. I don't know how I feel about those, but septic and being outside of the city to me personally is more worth it. Like I would much rather just be able to operate it the way I need to operate it. Because cities just, I don't think do a good job of regulating mobile home parks because if they're going to sit down and write regulations, they need to make different regulations for the mobile home parks. Like the way they regulate houses in there sometimes just doesn't make sense, but you read it and they're trying to regulate it like a home and they're just not built like homes.
right.
So I had one in a city where it was a year into owning it. The old building inspector moved out and they're not even our houses. Well, some of them, actually, I take that back. Some of them were still our houses. And basically the new building inspector says, oh, all houses need to have a 4x4 deck at least. And now we have concrete steps for 30 homes. So 60 sets of concrete steps. He's like, that's not going to work. You're going to need 4x4. Like, why? And it's like the reason is so if someone's in a fire, they can run out quickly and they need a landing because at a house, sometimes they don't. But it's like, I'm arguably making it less safe, but he's just reading it to a T the way the
Right.
for houses. I just cannot physically comply without we spent way too much to destroy a bunch of those and just rebuild steps when it was fine to begin with. So that's the kind of stuff that over time, it's just made me, I'll buy into city. Obviously there's reasons for that, but it's just, I have to get super cautious and figure out what their specific city rules are going to be.
Yeah, we've dealt with that in the with the city of Tampa. I mean, they're just super nitpicky about stuff, and like we have some parks that are just outside of the city or in Hillsborough County. It's so much easier. You don't have to deal with those guys. I mean, it's just crazy. They get in there and nitpick, shit, and they make you spend a bunch of money. Like I don't even understand it. Like if it's fine, like in your situation, it's fine, but they read out of the book, and then you spend $50,000. Right. Oh, it's not their money, right?
Yeah. And just me being in the military, the bureaucracy takes me from 0 to 100 in a second. I'm just like, why? And I just go back to just all the frustration of it. Well, that's just the way it is. That to me is like, as an entrepreneur, that's my least favorite phrase to ever hear. It's like, well, that's just the way we do it. It's like, well, why? It doesn't make sense. Mm-hmm. But it's just what it is, and all codes have a reason. And I'm a huge proponent of building codes and building standards, but they have to understand that there's an exception for parks. Another one I saw all the time as a broker, the city will pass an ordinance saying no more manufactured housing on private lots, meaning they don't want a mobile home. If there's a mobile home in the city that's not in a park, they want to just scrape it, build a single family house. It's obvious why they want that, right? They think it looks nicer and it probably does, but then they don't have an exception for a mobile home park. So you have a 100-lot park and somebody moves out, you're just trying to get the lights turned on and they're like, well, you can't bring a mobile home into here. Like, well, it's a mobile home park. I'm not going to shut this whole park down now because one person moved out. I'm not going to let it just slowly dwindle. And it just becomes this whole process of having to walk people through it. And oftentimes like there is a small exception, but it just comes up so rarely because there's only like 4 or 5 mobile home parks in the city. The clerk you're talking to has never dealt with it. And it's just, man, dealing with it is a lot. It's a lot on the back end, and you never really. The part I don't like is you never really know what the answer is going to be because when that new building inspector leaves because he gets promoted, now you have to talk to a new guy, and it's not just if it was just hey, here's the rules, no problem. We read the rules, we know it, but it's always like how they interpret it, which makes it tough.
Yeah. I mean, we had a deal we just closed in Arizona, and I renegotiated the purchase price because there was less units there by a big clip. And me and the seller were, pissing back and forth for 45, 60 days on that. The contract got extended. He was mad. It was a mess. So we came to the conclusion that he was like, hey, I can move in 10 more mobile homes for you. And I'll do it. We'll set it up. We'll get the cost set up. I'm like, great. I can roll with that. I got 10 more park-owned homes I can sell. As long as I get to inspect the homes and we get to approve what's in there, hey, let's work that out. We'll get it done before closing. So I call zoning. I'm like, hey, let's just make sure, right? Our zoning verification letter that we got, it was pretty ambiguous. It didn't give a straight answer. Oh, big surprise. And so I called, and the lady is like, no, you can't do that. She sends me an email. She sends it written. It was longer than that, but it essentially said that you can't bring anything else after something has been removed for over 12 months or whatever it was. So we're like, okay, I still got my price reduction, so I was happy. But a day before closing, the seller's like, well, I need to just check with her because I think this is BS. Maybe it was a week before closing or whatever. And it comes to find out that this lady's like, oh, I'm so sorry. Actually, you are allowed to bring in homes to this place. And, our deal of him bringing in homes didn't, it never transpired. And the reason I'm bringing this up and saying this, because this kind of bullshit, like I could have had 10 other homes at great value in that park because I don't bring in homes. That's not my game. We'll bring in a few, but it's not like I doubt we're going to end up bringing 10 in there. Maybe we will. But I could have gotten those 10 extra homes. The bank was going to finance it, so I wouldn't have had to pay, cash out for all 10 of those homes. And these people just don't realize, that's a big freaking impact, dude. That's 800 grand.
Yeah.
And it's just crazy. And she's just like, oh, I'm sorry, sorry about that. But I think it goes to your point is like my head starts to boil when we talk about this bureaucracy BS too, because one little mistake like that, because someone's either lazy, they don't know what the hell they're talking about, or you really have to walk them through it. It can make your life, hell, and could make you not do a deal that you should have did, or spend a bunch of money that you shouldn't have spent. And in my case, it's 10 less homes, which I think that park's going to be worth 80 or 90 grand a lot. So there's 900 grand, So, yeah, I don't know. I'm with you, man. That stuff just gets my blood boiling that.
And you understand why once you talk to enough of these owners, but the cities have to get so strict because the owners of a lot of these parks who own them for decades don't do anything.
That's right.
They've given up on it to where the city's given up on it. And so it's you understand why they're so against the parks, but it takes some months, to improve it before they realize, oh, this new owner actually does care. And then they might work with you. I just dealt with that on the park we just bought, where the owners, it was all over the place, right? Their parents died and they inherited it. There's 4 of them trying to run it and it just wasn't going well. And the city's just trying to get them to pick up trash. And it has to get to the extent, if the city's giving you violations, it's because they've asked you probably 10 times now. And, I find this out the day of closing at dinner with the owner. He's like, oh, by the way, they sent me this. I'm like, oh, great.
Oh, of course. Of course.
But I just called the building inspector and said, hey, I just bought this. I know the violation says it's a week. I just ordered the dumpster. It's not even going to get here till Thursday. Can you please give me some time? He was just so excited that I actually called him that he's like, yeah, take all the time you need. I just need it picked up. And it's that's all it has to be, right? A lot of, I'm mostly in Alabama where I think things are simpler in a lot of ways, and the cities want to work with you. I don't think there's as much of a stigma around mobile homes as there are in other states, but it's still just a process. If you're going to be in the city, you have to get on their good side and you have to actually do what you say you're going to do. And you're pitching them a lot of times. If you need to do anything to improve the property or just continue to run it, you really have to get them on your good side quickly. Otherwise, you can just choose to make your life hell for no reason. And
they can. Yeah.
I might not agree with it. What am I going to say? It's their city. If they pass a law, that's a law. And that is I have to do that.
Yeah. Yeah. What is your what is your opinion on, you're buying a park and there's really no violations or anything? What is your opinion on going to meet with the city and introducing yourself as the new owner of this park if there's no violations or anything screwy going on there?
I mean, I know there comes a point where you just don't want to cause an issue.
Correct.
And a lot of times what will happen is the owner will say, yeah, there's no problem. Because what we just talked about is when the city's like gotten to the point where they're irritated. There's a point where the city's just kind of nose blind to it. They're not really paying a whole lot of attention. They know there's violations there. They just don't care enough to go do it. When you're the new owner, they're like, oh, now this is the guy that we're going to make do all this. I dropped the deal a couple months ago for the same reason, where the old owner has owned it for 40 years. He's like, oh, the city doesn't care. It's fine, blah, blah. Well, I go talk to the city, like, yeah, there's a ton of problems there. Like, you're going to have to do this and that and that. They know if they make him do it, it's going to be an issue. And if I'm the new guy from out of state who's got all this money, which like I work out of my garage, like it's just not the real kid. They're going to make me do all of it. And they're like, hey, this is the rule book, because they have no relationship with me. I didn't go to, high school with them, which is crazy how much it happens with these owners who have owned it for so long, but they have relationships that you can't necessarily see just looking at the documents of what the law says.
Yeah.
Just because the owner got away with it does not mean you're going to as the new guy. Pretty much never. Like they hear it's a new owner. Hey, here's what you have to do because this is a problem.
Yeah. Yeah. And I like, what I've learned, especially in the places I buy, because I'm buying in more urban areas where I am in the cities. And I don't poke the bear if I don't have to. If there's a park we're buying and there's a shit ton of violations and there's problems like that, yeah, okay, I'll go talk to them and be like, hey, we're going to get this fixed and clean it up. But if there's nothing, I'm not poking the bear. I'm just not going to do it because I think it could cause, I think it could cause more problems than not, for exactly what Jeff just said. Oh, rich out of state guys buying this park, like,
yeah.
Let's get them to fix a bunch of stuff that doesn't need to be fixed.
And not just for mobile home parks in particular, but like if you look at developers, you always have to deal with the city. The way these building codes get built, it's one thing at a time over decades, and a lot of it conflicts. They will have one code that says you need to do this, and they'll have another code in the same city that says you have to do that, and they literally make each other physically impossible. It happens all the time, and there's one of those things where it's just like you said, just don't poke the bear. Like if you don't, I agree with you. If there's problems, you got to go and you got to figure it out, because you're going to immediately deal with those. But if there's not problems, you just need to just do a good job of maintaining it and not let it get to the point where it is a problem.
Yeah. Yeah. And we had a perfect example of this where we were in a pissing match with a city because people had done some things to their homes and, fixed some stuff on the inside of their homes. And the city's like, well, they didn't get a permit to do that. And I'm like, well, it's a car. Like, it has a title. Like, it's not a house.
Yeah.
And they're like, okay, well, we're going to send it to the DMV. And the DMV's like, dude, it's not us. It's not us.
Yeah.
Like, we have nothing to do with that. It has a title. It's a car.
Yeah.
And we go back to the city and they're like, yeah, that's a building violation. So like, this whole issue, we had about, 70 to 75 homes that had stopped work orders on them because of this whole like ordeal. But we ended up getting a bunch of them removed, but 18 to 24 months later, right? And attorneys and dealing with the city, it's just like, crazy. And the problem is that once the city opens their eye and opens up a violation on it, like even if they're wrong, they can't look away now.
Yeah.
They can't look away now.
Right.
And, I just caution you to kind of like, make sure. And like our new rule for us is like, we don't let tenants really build anything, like at least structurally modifying. Right. We learned that a couple of years ago, but it's always an interesting thing. And I always get just so freaking hot when I talk about these people at the cities, because they just, they say one thing and then they want affordable housing. And then out the other end, they're like, oh yeah, but you can't do anything.
Yeah. It's such a gray area because the mobile home park space is so weird. I mean, like you see all these houses there, they look like structures. Well, legally they're not. And it's just, you and I understand it because we've been in the industry for a while, but it's not obvious. Like for them saying, oh, the building code says you can't do this and you're doing that. Well, that makes sense to them. And I see why they do it. It makes total sense. And that's what I mean. Like every city kind of needs to have its own rule. I actually have a park that is zoned mobile home park. It's the only parcel in the entire city zoned that way. And every time it comes up, like every email we send to them about a question or something we have to do, I just forward that, like that PDF of that page, just so they're like, oh, okay, right.
Mm.
And it works.
Yeah. 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 You got to give them more information than they need. And you have to just kind of keep prying until you get, an answer really that you want, because they can do whatever they want.
Right.
So what markets are you buying in? Like, what's your criteria for a market, or you just have specific markets that you buy in?
I would say the two states I actively pursue the most are Alabama and North Carolina. Alabama, just because I used to live there, I feel like there's a huge advantage to knowing the market. If you just looked at demographics of like populations and incomes and stuff, it probably wouldn't be most people's first choice. But I like it. I find a lot of good deals there because there just is not as much attention there. But in the long run, I know like if we get that property stabilized, we increase the value quickly. In 10 years, is it going to continue to appreciate a ton? Probably not. And that's kind of why, like North Carolina, it's simple. I have a lot of family there. I know I'll be out there a lot, and I think there's so much value in meeting an owner. And it's tough when it's a deal in the middle of. It doesn't have to be in the middle of nowhere, but it's near nothing else. You have no reason to go out there. Sometimes it just doesn't feel worth it to go meet them if you don't know enough. Whereas if you're going to be there, like it just happened to me last week. I was at a friend's wedding in Alabama. A broker sent me a deal. I went out and met with the owner because it was an hour out of my way. And it went really well, and that pushed that deal really far forward. So that's why I stick in those two areas. But I'll look at pretty much anything in the Southeast. I don't look at Florida a lot just because I know it's like a whole different game. Like guys like you, like people in Florida tend to stick to Florida, and people tend to stay away. But that's pretty much where I look.
Yeah, yeah, and I think you and I operate the same, because I think there's nothing like. I say it on all my shows and my podcasts. It's like when guys are asking me like questions about if something's a good deal or not, I'm just like, you don't know the market well enough to understand if it's a good deal or not. You don't know what the price per pad should be in that market. I guarantee you know that. If you're looking at a deal, you know what a good price per pad is in that market, and for what you're getting too. And so I just think that's super important. Like we just started buying in Arizona. I spent a lot of time out there this year. So I feel like I know the market, and I can know a market pretty well by just going there and hanging out for a week, talking to people, going to restaurants, going to the shitty part of town, going to the great part of town, and like just getting a feel for the market. I think that is huge. If you know the market. I mean, I see people all the time. They're just looking for something where they can it's a 12 cap and they can make a bunch of cash flow. They have no idea about the market. They don't know. And I just think that's the wrong way to go about it. I'm here in Florida, so I go drive and see sellers all of the time. And that gives you a massive competitive advantage, I think.
Yeah. And so figuring out, I'm in a fair amount of small towns and just cities in general, like getting actual data on how the economy and the industries are going there is very difficult to do today, especially because now we're looking at stuff that happened during COVID and data was all over the place, people moving left and right. And it's all lagging by a very large degree. Like one of the cities I lived in for a while, like I look at all the data and it's like, well, the population's been all over the place. It's a weird city. It used to have basically one employer out of the 15,000 people who live in this small town. One employer was 11,000 people, and they moved out like 3 decades ago. They shifted off to Mexico. And so there's all these, like, it's very hard to get a feel of it. And then you go there and it's like, okay, they just opened up a brand new Publix. Chick-fil-A just opened up. There's all these hotels going in. There's a massive golf course community being built. It's like, if I just looked at it on paper, I'd say like, no way, it's just not good enough. And then I go there and I'm like, whoa, this is not what I thought. And that is a huge advantage because there's a lot of deals people will pass on because they look at it to, 30,000 foot view. And then you go there in person, you're like, oh, that's because of this. And it's really hard to figure that out. Like I have a park in a very small town that was actually one of the HGTV hometown makeover towns. So the whole entire town was made over and repainted and redone by HGTV.
Oh, wow.
I only found that out because I was telling my wife or my mom about it. She's like, oh, I'm watching that show, that whole town get made over. I'm like, what?
Oh, wow.
And you couldn't, I mean, I probably could have Googled that and figured that out, but I wouldn't have thought to. But going through the town, I'm like, man, this is really nice. Like some small towns in the South that are sad to drive through. And this one was just incredible.
Wow.
And it's Wetumpka, Alabama. I mean, there's only been 2 of those shows. So, but it's interesting. Like I think that you just cannot replace being on the ground and getting a feel for it. It also kind of shows you how your park fits into the market.
Sure.
Is it considerably worse than everything else around there? Because that's a problem. Or is this the nicest option? Like for me, I went there, I saw another park that was bigger and charging like 3 times as much and was not nearly as nice. I was like, okay, well, that makes sense, right? This is the nicer option. It just so happens to be cheaper because the guy's owned it for 50 years. So stuff like that gives you a lot of intangibles that you kind of can find online, but not really.
Yeah, I couldn't agree with you more, and I think we have the same thought process on that. I just, when we started buying in Arizona, and we were looking at these deals in Arizona after I went and spent time out there and like looked at the deals, looked at all the other deals in the market, drove just about every deal in the market. Like now, I basically know the deals when they come up now, but then I also know the quality. I'm like, okay, our park fits in this. Like, hey, this is a great deal, right? I agree with you 1000%, dude. If anybody tries to tell you otherwise, I would question if that person knows what they're doing. But I mean, like what Jeff is telling you right there is massive. Getting on and actually understanding the market at a deeper level than just a 30,000 foot view, I think is huge.
Yeah.
What do you think for the mobile home park industry, generally, like what's your outlook, I guess, economically? You think we're going to have a crash in the next couple of years? Like where are your thoughts at?
I always think of people in the office space. Like, what did they think 10 years ago? Because they probably never saw a crash. And I try to stress test the industry. I can't think of like a realistic thing that could make mobile home parks go down considerably in value like that, especially when you study housing itself, it just gets more litigated. Like in Colorado, you cannot build a condo, otherwise you're going to get sued. So there's literally no condos being built in the state. Stuff like that is just the way our country goes. We just sue everybody. All this stuff happens. There will never be another solution like mobile home parks, like just period. Like I have tenants who pay me $400 a month. That's it. And they live in markets where it'd be $300,000 to buy a house.
Yeah.
Like that will never go away. The only thing that I've like theoretically even been able to think of that could bring it down is if housing got so bad that just like the government came up with some new program that we can't even foresee today, where they'll just let anybody own a house, no credit check, no nothing, ridiculous payments, like 50-year amortization. They'll do vouchers for it. I don't see that being realistic. So outside of that, I really think with the way the industry is going to go, and something I want to get more involved with is the expansion and development of parks. I'm actually getting my master's degree in real estate development right now. Shout out to the Navy for helping me pay for that.
Nice.
But
nice.
When you learn about it, you realize like developers kind of view things in one way. If it's cheaper to build something than it is to buy it, they build it. When it's cheaper to buy something, they buy it. It's not complicated. I think the way the industry in mobile home parks is gone is that it's going to get so consolidated that the price is going to go up for the first time in 5 decades. It's actually going to be cheaper and easier to build one than it is to find one that you can actually make good returns on. I don't think that's the case right now today. I think that's where it's going to be in a decade. So that's something I'm trying to gear up and we're just trying to do more expansion projects than we have before, just to try to figure out the process there. And it won't be easy, but I think that's something I definitely think in 10 years, Aspen Ridge will have a pretty well built out development arm that builds brand new communities from scratch. Because where I used to live in Auburn, Alabama, that's happened. Like within the city in the last 3 years, there's brand new parks that have been built from scratch. So it does happen. I think there's going to be more of it.
Yeah. And I can see us getting into that too. And that's just, you just opened my mind there talking about how a developer thinks when it's, because that's, the price of these things is going up. And I wonder, some of my concerns are, around the rent. I mean, the rent here in Florida is getting high, but multifamily rents are high. And so do you ever see like, and people were saying this 5 years ago, right? They said, oh my God, if the rent gets to, $800, like when is the rent, like, does it ever flatten out and the rents like actually decrease or crash? in this business? Do you foresee that happening?
What I'm very cognizant of, and one thing I do, talking about the market analysis, the competition for a tenant is not another mobile home park. They're never going to go to another one because it's cheaper.
No.
But where I operate, they can buy their own land and move their home there. So there is that ceiling of like, in a market I have where it's 400, if I just charge $2,000 a month tomorrow, every single one of those tenants will either just abandon their home, sell it, or they will go to another, they will buy their own land because it will be cheaper at that point. That's the markets I'm in, where you go outside the cities, it's rural and there's open land. Where you're at in Florida, that's not going to happen. Like, they're not going to be able to get that done. So in those, I think there's two different levels too. There's definitely a cap to where people will move into a new mobile home park, right? At a certain point, they're not going to get approved for the loan, if the lot rent's $1,500. But unfortunately, like what you'll see happen a lot, especially with these bigger REITs and really nice markets, they're going to take rents up well beyond what somebody would move in at, to where it's like, it's really just the fact that the people are kind of stuck there that they can charge so much. I see this. There's parks I've seen in Denver where the rent is $1,400 a month.
Oh yeah.
And it's like, you could rent a 2-bedroom apartment for that. Like, all the homes there are old. Like, the people have just been there so long, they're just not going to move. But it's not, if I was buying that park, I'm not thinking I'm going to get a new person in here at $1,400. Like, that's never going to happen in my mind. Maybe I'm wrong, but I don't see that happening. So I think there will come a point where it'll get too high. But outside of that, I think our national debt is getting so high, our government's only choice is going to be to inflate it away. And so I think it's just going to go down.
Yeah. And like your example where you said in Denver, like someone can go rent an apartment for $1,400 a month, but like, are there apartments available where they can go rent for $1,400 a month, or is that hard to find?
In Denver specifically, there are a lot because they overbuilt, but that's a local.
They built stuff that they can charge $1,400 a month.
I'm not super up to date on what their rents are, but I would think it's probably, I might be wrong in the 1,400 for a 2-bed, but it's like outside of the city, it might be like 1,800 maybe. I don't know. I haven't rented. When I rented in COVID, I had a 1-bedroom studio, 1,700 in the heart of the city. So maybe I'm wrong on that. Maybe it is closer to like 2,000 for a 2-bedroom. But it's still just one of those things where it's like, when you add up the cost of the house and the lot, it's not feasible. It's not cheaper at that point enough to justify it, I guess is what I would say. But the people there have owned their home. Their home is free and clear, so they can the owners can kind of get away with it. But that would never, like that, I don't think I would ever see that happen in Alabama, because at a certain point, they're just going to pay a mover $5,000 to put it on a private lot. And they'll, So there is kind of a ceiling. I think we're years away from that, but I think some people will probably push it too far. But at the same time, it's like, there was a really nice park in Auburn that's now a Buc-ee's because they weren't charging enough. That it was cheap. It was, that's the other side of what happened. So like, I'm not going to paint those park owners as the bad guys, because that land itself, if at 1,400 is probably still not the most, highest and best use for that land. So there's a good chance that it'll still get bought out, which is worse for all the tenants if they don't have a place at all. So it's tough. It's easy. I think there's a lot of people really starting to paint the industry as bad, but it's the best option. It's not perfect, but it's the best option people have in a lot of cases. Yeah.
And I think it's just, we're easy targets. It's an easy story if somebody needs to get clicks. It's always the same story. Mobile home park owner does something, right? Yeah. Unfortunately, but I don't know. I just always wondered, like rents have sort of leveled out in Tampa and kind of gone down a little bit. We're still really low compared to all the new stuff that they built in Tampa. But like, I wonder if there's if that new supply, gets gobbled up and rents kind of stabilize out and start going up a little bit every year, we'll be fine. But I just don't know if there's a point where it's like, okay, we can't raise it anymore. I don't see that, right? Maybe you do a 2%, increase, a very small one. Like, I don't know. I just always kind of, wonder about that. And also, like, this random stuff that just happens, like the crazy thing that happened last week and crazy stuff that's happened before that could kind of, literally flip shit upside down at the snap of a finger.
Yeah.
And I don't know what that is or what that could be, but I just, I don't know.
The other thing I think I think is going to happen in the industry. I use a lot of AI in the business, and I can see how it is 100% going to displace more jobs than it creates. And I think what we're going to see is these mobile home parks that are typically, the best option for the bottom 10%. I think is going to be the best option for the bottom 40%. So what is that going to mean for rents too? I mean, I think that when people just straight up cannot afford a house, I think it's going to be the go-to for a lot of people that it historically has not been. And they're, that's probably another black swan event where it's like, if we really do, I think 20 years, I think it's more likely than not that we're on a universal basic income. And that to me, it's like, well, what does that mean? I don't know. That's too far out for me to estimate. And by then I can pivot and figure it out. But the more I use it, the more
I don't want to be on the side where I need to get some UBI. I got to be on the other side.
And even if it did, I think people would there'd be enough of the population that says, well, I'm just going to spend as little on housing as I can and go spend the rest on this. So it'll still be, they're pretty indestructible. I feel like I need to knock on wood after that, but I don't see a whole lot that could disrupt the industry to where any other asset would have been better. Like if whatever happens in mobile home parks to destroy them, it's probably happening to everybody.
Yeah, that's true. That's true. Yeah. I just always think about that stuff, and I'm like, okay, like, I think because in, 2022, when they started, precipitously raising rates, that, people were just thinking, and even me included, like, oh my God, it's never going to stop. It's just going to keep going. And then they started doing that. And so I'm just always a little bit more cautious on, like, I don't know what the hell these guys are going to do.
Right.
So
it's not ever going to make sense. I think if you just look at I just don't see another way our country survives without just inflating things away. That's really the only thing, and which helps you as a real estate owner. But in your personal life, it still sucks. But it's weird in terms of where I think the industry is going to go. I think it really comes back to the replacement cost. I underwrite the replacement cost on every park I buy, just so I figure out if I'm making a good decision or not. Not that I think I would actually go replace one, but I saw a deal in one of the markets I own the other day where they're underwriting it at buying it for $85,000 a lot and selling it for $110,000 a lot. And it's not in like the heart of the city. I'm like, man, you go another half mile down the road, you can buy raw land and build it for probably $25,000 a lot. Like at some point that will not make sense.
Yeah.
And that's something I think the industry just as a whole, nobody in the industry is really a developer. I mean, there's probably a dozen that actually do it. And so we just don't think of it that way. But
right.
I think it's a muscle that a lot of mobile home park owners are going to have to develop, because it's eventually, I think, going to be inevitable if the industry wants to keep going. And I think what it'll be mobile home park owners that just want to keep their business going to develop. I don't think you're ever going to see like apartment developers like, oh, we should use this land to buy a mobile home park. I don't think that's ever going to happen. So it's going to have to like slowly be adopted.
Yeah. Before we get out here, how much longer do you think we have to buy from mom and pop?
Probably like 5 years.
Yeah.
Honestly. I mean, I was at Seco the other day and I met another guy who owned in Alabama, and we're talking about a deal. I'm like, oh,
Garrett?
Yeah. That proves my point. It's like, there's not many of us, but we know of like the same 200 properties there are. And that's where I think it's going to get to the point where it's like, I really personally, like, I've looked at other assets. I don't want to own anything else.
Yeah.
Like it, to me, is kind of the perfect real estate asset to own in a lot of ways. And so there will be a point where I'm like, okay, am I going to learn self-storage and deal with all that crap, or get into multifamily and be like the other 10,000 people who are apartment syndicators? Or am I going to figure out how to take this land, pave it, and put utilities there? Like, that's probably what's going to happen. Like at a certain point, every park I have was built by somebody. We built the pyramids 4,000 years ago. We can build these mobile home parks. I think the whole narrative that they cannot be built is just obviously there's a legal side of it, but outside of the cities, which I like to be outside of the cities, it's just kind of been an economic thing for the last couple decades.
Yeah. It's interesting. And I'm with you. I think we got 5 years, maybe 10. I mean, there'll be mobile home park owners with small stuff that no one wants to buy, like 10 lots and lower. But the other stuff, I mean, here in Florida, we're starting to see it. I mean, there's just, everything's kind of balled up. I mean, we're closing stuff that we're just finding, right? Because we've been so ingrained in the market for so long. But yeah, I mean, maybe I'm being too, we have 10 years left, but I don't know, man. I think you might be right. I think 5 years,
At least not enough to like really get a business going. Like there's always going to be those one or two that just hold out. But in terms of like, if you're going to start from zero today and make a business of buying dozens of these, I think personally, it might already be too late. Because by the time they get their lending relationships and the management systems down and the scale and the broker relationships, those deals are already going to be bought up, I think, personally. And so that's a big thing I tell a lot. More than half of the dollars that have been invested in the deals I've raised has been from other people who own their own mobile home park, not LPs in other deals, but they're just like, the only reason I think that's happening is not because I'm some sort of genius. I just think it's like, they believe in the asset and there's just fewer and fewer deals because they wouldn't give me a promote if they could just do it all themselves.
Right.
So I think that to me is one of the most, the statistics I look at where it's, I mean, it also probably has to do with the fact that most people I know are in the industry, but it's still like, I think that's an odd sign of something that's kind of telling what's going to happen.
Yeah. Yeah. And I think too, like, so we've, the deal in Lakeland that we closed on, it's like, they weren't the original mom and pop. They were kind of the second tier of mom and pop. They actually did a really good job operating them. We've still got a great deal on it. And 3 deals I have under contract now in Florida, it's from like the people who bought from mom and pop. So I think we will see that too, like your mid-tier operators where there'll still be opportunities. Maybe they ran their business efficiently than you, and you still are finding ways to add value. So I think there will be that too. But there's more and more consolidation happening. And I think you just have to get smarter with how you're adding value. I think you need to don't operate off the data from yesteryear and say everything's expensive. Because if you say everything's expensive, you're just kind of trapping yourself in the thought process that like, I can't find anything.
Yeah. I mean, it's a good thing for the industry because when these prices go up, it's easier to get loans. It's easier to, show your value compared to other ones. It's better when you sell. Yeah. But it makes it tougher to find them. And for the mom and pop stuff, it's like, I think that's another thing that I kind of was of the opinion, it's like, oh, these are all going to get bought up. But to your point, there's going to be people who buy 4 or 5 of them and do a terrible job. Like that will happen too. And mom and pops are not always doing a bad job. Some of them do a much better job than even I can do today, because in a lot of cases I'm dealing with, they live there. So they can go fix something much. Yes, I have to like get somebody on I'm not flying out to go fix a water leak. Like there is a component of the mom and pops that do it better than some operators. And so I think that'll happen. I think what'll happen there is they'll get bought up quickly. Like those will need to sell, which we haven't seen a lot of. We'll see people needing to sell because they actually have debt where the mom and pops didn't. And that's just going to go to the person who's got the most cash. Yeah.
Yeah. Well, Jeff, man, dude, I feel like we could keep talking about this stuff for forever. I mean, any last words or anything you want to say before we get out here?
I would just say, if you're interested in kind of the deals we're doing, you can check out my website, aspenridge.capital. Right now, we still do 506B deals. So we're open to accredited and non-accredited investors. But that being said, I can't advertise any of my deals. And so I basically just have to get on a call with people, get to know them. So if people are interested in that, that's probably going to happen just for the rest of this year. And then we're going to look to do a fund as a 506C. But other than that, like I'm always eager to talk shop with potential investors or lenders or people who are other operators. Like I feel like I have more conversations with other operators than I do investors, just because there's not a lot of people to go to. There's not a book on it really on how to do it. So a lot of it you just got to figure out from experience. And so anybody who wants to talk shop, just give me a call.
Yeah. Awesome, man. Awesome, Jeff. Well, thanks for coming on to the MHP show, and we will see you all next week. Peace.